Kalani, good afternoon to you. Well, we know our economy is under pressure. What's that doing to banks?
Well, there are these concerns, Stephen, good afternoon. There are these concerns and this talk that South African banks could be facing a similar crisis that we saw in the 2008 financial crisis. And that's because of a number of things, a number of risks that even the stability index of the Reserve Bank has actually spoken about. But it's all about confidence. It's because of the lack of confidence in a growth in the South African economy and the rise in sovereign debt, our debt as a country. A number of people and experts are saying that that could easily translate to a sovereign debt could easily translate to a banking crisis. And as we've seen as well, with the number of banks, all of them really increasing their impairments support in terms of their concerns around consumers being able to pay their commitments and service their debt. All of those are coming to fruition in South Africa as concerns, particularly as we've seen with the grey list. So Ntokozo Khumalo went out as South African banks have come under pressure as investors sell down holdings of perceived risk assets during a turbulent time for capital markets. But are these reasons enough to draw parallels to the 2008 financial crisis? Ntokozo Khumalo filed this report, having spoken to a number of experts.
Fears of a global banking crisis becoming a reality this year continues to mount on the back of the fastest interest rate hiking cycle in history.
Two pockets of risk which appear to be building up. So the one is on the deposit side, where there has appeared to be a flight to safety, and pretty much you've seen depositors leave these smaller regional banks in the US and move towards money market funds. That's largely an outcome of, obviously, with interest rates moving up and money market funds also offering higher yields.
Needling says there's also a build-up of risk in the commercial industry on the back of those rising interest rates. Zoning in on South Africa, he says the trend suggests that the domestic banking sector has not experienced any meaningful squeeze on either deposits or lending growth, and that banks are holding capital and liquidity buffers ahead of any regulatory requirements. Denker Capital Director and Portfolio Manager Koki Koiman says South Africa faces different challenges to the United States and Europe, a potential solvency and profitability challenge.
So when a lot of your clients cannot repay their loans, then you've got bad debts, and that affects the profitability of banks. And, we have seen in the past that leads to problems and in fact it could lead to a bank failure when a bank has been very aggressive in its lending policy.
Despite this, analysts do warn that if a banking crisis does materialize, there are risks that South African consumers will have to prepare for.
South Africa is relatively well contained. A breakdown in confidence in the global banking system, even though it might not directly affect South African banks, it does impact on those banks' ability to basically do business. So what you'll find is that it's more difficult to get loans, and credit extension would slow down in quite a pronounced way in the South African businesses as well.
However, Needling and Koiman says that while global banking crisis fears are justified, it is misplaced to draw parallels to the 2008 financial crisis.
The main difference between today and 2008 is 2008 was characterized by widespread risk-taking, which became systemic, and it was endemic across the whole system. So pretty much across the board, banks were taking risk which their peers and competitors were not necessarily aware of.
Another positive, according to analysts, is the Reserve Bank proposing a deposit insurance scheme to improve the banking system's ability to manage shocks. They do encourage consumers to take another look at their budgets and work on cutting down on debt as much as possible. For Newzroom Afrika on Channel 405, I'm Ntokozo Khumalo in Johannesburg.